Hi everybody, this is another video tutorial on how to work your way through a 10 column worksheet. Why do we call it a 10 column? Well, you'll notice that there's 5 categories: trial balance, adjustments, adjusted trial balance, income statement, and balance sheet. And within each of those categories, there's 2 columns, a debit column and a credit column. Debit column, credit column. So you take the 5 categories, you multiply that by 2, you get 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. That's our 10 column worksheet. What you'll typically get is a list of accounts under the account title column. Now, this is like in this case here, for our purposes, this is going to be a very simple worksheet. Some of them can be quite complex. There'd be quite a few accounts here. This one's just simple. We've got 5 asset accounts, 1 liability account, a capital account, a drawings account, a revenue account, and at least 2 expense accounts. You'll see what I mean by at least in just a second. And then you'll have your trial balance all filled out. This has to balance, okay, 12,000 on each side. So first thing you want to do is you want to go to your adjustments column. Okay, we'll have to do our adjustments. Now we've done adjustments for activity 5 and 6. We're going to do them again here. And for our purposes, I've just got 2 simple ones that I'm going to walk you through. There might be more when it comes to other worksheets, maybe up to as many as 6 or 7. I've just got 2. The first one reads that supplies have been counted and there are $300 on hand at year end. Well, I look at my supplies account and I see that my trial balance says it's got 800 in it. Well, I have to adjust that number so it comes down to the $300 that's on hand at year end. Well, to do that, I'm going to have to credit the supplies account for $500, taking the $800 debit and reducing it to a $300 debit. But as with everything else in accounting, if you credit something, you're going to have to debit something. So if I credited the supplies account for $500, I'm going to debit supplies expense for $500. That should be familiar because we did those activities, pardon me, we did those adjustment entries in activity 5. Okay, now on to the next one. Furniture is amortized using the straight line basis over 5 years with a salvage value of $500. So what that means is we're going to have to make a little formula here, and I'll take a little space here. I'm going to say equals $5,000 minus 500. Okay, and that gives me $4,500. So I get my 5,000 from up here as the cost of the item, and then my salvage value is given to me in the question here at $500. Now I take that $4,500, pardon me, $4,500, and I divide it by the years of use, okay, of 5 years. And oh, that didn't want to work. Let's try that. 4,500 divided by 5, and I get $900. So every year I have to amortize $900 off of the furniture expense. Now, the adjusting entry, if you remember correctly, was a debit to amortization expense, pardon me, and a credit to the accumulated amortization of the account. So I'm going to credit accumulated amortization for furniture and come down to my expenses. Oh, what happened? There's no amortization expense. No problem. You just have to make it up. Amortization expense. Now some examples have you list amortization expense dash furniture. I'm not interested in that. If you just make one amortization expense, that's fine by me. And you have to debit that for $900 because we credited the accumulated amortization for $900. We have to have the corresponding debit for $900. Okay, on we go. Adjusted trial balance. What we have to do now is transfer all of these numbers from the trial balance to the adjusted trial balance, including any effects that our adjustments had on them. So, for example, $500 in cash. Well, the $500 did not get affected by any of the adjusting entries, so we just debit that for $500 under the adjusted trial balance. Same with the accounts receivable, that's fine. But then we get to supplies, and we see that supplies has a debit balance of 800 and a credit balance of 500. Well, if you have a debit balance on the one side of the T account and you have a 500 credit on the other side of the T account, that nets out to $300, which should make sense because in the adjusting entry it said you've got $300 of supplies on hand at year end. That's where that $300 ends up on your worksheet. Okay, furniture, That account wasn't affected itself, so that's $5,000 debit. Then we come to accumulated amortization. Well, we do have an adjusting entry for this because we made one already. We have a credit balance of $1,500 and we're crediting it for $900 more, which gives us $2,400. Okay, accounts payable wasn't affected, so that's a credit balance for $1,250. LRF capital gets $750. Drawings gets $500 because there's no effect on it. Revenue is $8,500. Bank charges is $3,200. Remember too, sometimes I notice that students get this mixed up. Make sure that you get your debits and credits correct. If this is a debit in the trial balance, make sure it's a debit in the adjusted trial balance. Moving on, supplies expense. Well, there was $500 on the trial balance, but we also have an adjustment of $500. We're debiting that account for $500 more. So that's going to be a $1,000 debit. And our amortization expense. Don't forget about that at the bottom. We debit that for $900. And you'll know if everything is hunky-dory because your balance on the adjusted trial balance will work out and balance out itself to $12,900 in this case, and in every case it'll have just a different balance, but it'll work out that way. Okay? All right, so we're going to move on now to the income statement and balance sheet. So for those, we have to do now is we have to determine which of these accounts end up on the balance sheet and which ones end up on the income statement. Well, I'll give you a quick hint. I know right away anything from drawings up is going to be on the balance sheet. Keep that in mind. Anything from drawings on up is going to be on the balance sheet. So that includes a $500 debit. And again, remember to keep your debits and credits straight here. Okay, to drawings, $750 to capital, $1,250 to accounts payable, $2,400 to amortization, switching over to the debit side again because we're in the assets, $5,000 to furniture, $300 to supplies, and I get that number straight from the adjusted trial balance, $1,500 to accounts receivable, and last but not least, $500 to cash. Okay, now those are all the accounts from drawings up that ends up on the balance sheet. Revenue and expenses, those guys all end up on the income statement. So I get 8,500 here, and I'm just going to take my adjusted trial balances and move those over. 900, and there we go. Okay, now maybe you've noticed it all the time. It's been balanced, pardon me, totaling up each of the columns down here below. And it's maybe a little concerned if you're not used to this or if you've forgotten how to do it, but these are not going to balance. Okay, your income statement amounts and your balance sheet amounts are not going to balance at all in this question, right? They're not supposed to. What has to balance is the difference between the two columns in your income statement and the two columns in your balance sheet. So in this case, I took $8,500, which is my credit balance of the income statement, and I subtracted the debit balances of $5,100, and I got $3,400. Just as a tip, always take the difference and put that under the lower of the two balances in your debit or credit of your income statement. Same said for the balance sheet. You take $7,800, you subtract that $4,400 from it, and you take that difference and you put it under the lower of the two totals here. And notice that this amount and this amount are the exact same. What this represents is net income. That is your net income figure that's going to show up on your income statement and going to appear in your capital figure as well. Capital account, pardon me, on your balance sheet. Then it starts to balance through your debits on your income statement and your credits on your income statement balance, your debits on your balance sheet and your credits on your balance sheet balance. Okay. Now, this is kind of neat too, because once this is all done, prepared, it balances, and I ask you, and I will, to make an income statement and a balance sheet, all of the account figures are right here. Everything's ready to go. You know, all the accounts that have to show up in each of the statements. All you have to do is basically just copy everything over or move everything over and just start typing things in. It's just a matter of filling in the blanks at that stage. Okay, guys, so hopefully that was helpful. If you have any questions, please go ahead and ask me. Try the practice exercise, and then make sure you give a very good chance, a very good effort to the assignment as well, and turn that one into the Dropbox. Okay, I'll be online if you got any questions. Thanks. Bye.